Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Nifty and Bank Nifty short-term view. I know that it's really funny to say good evening to all of you because today's day has not been that great in the markets for many people. As you can see that the markets have tanked more than 1.5%, especially in Nifty. Now, looking at the daily and the hourly time frame chart, it's clear that the hourly time frame chart is clearly showing a downtrend in the Nifty spot, and the daily time frame chart is showing flat trend. Neither the trend is up, neither it is down. Now, looking at today's video's title, you would be amazing. You would be thinking that what is this wedge for, especially for newbies who are extremely new to the market. I just want to share one thing with all of you, that wedge is generally a reversal pattern, that when markets are trending on the upside, and if we have some sort of wedge formation, and if that wedge is broken on the downside, then the market can tank or it can correct on the downside, and this is what has happened today. Now, taking into consideration that the overall trend is up in the weekly time frame chart, if we clearly check, you can see the trend is up in the weekly time frame chart, and this is a medium term uptrend. So is this sort of breakdown pretty much enough for the markets to crack down to start a new downtrend? For starters, I guess we should understand that even in my previous educational video, weekly and weekly sectoral analysis, which I shared with all of you on Sunday, I clearly shared that within all of these sectors, it is very, very difficult to find stocks that can give fresher breakouts for swing or for positional trades. So generally, when it is not a time of plenty, if it is consolidating, and after consolidation, if there is a breakout, it's a different thing. But when it's not a time of plenty, when whatever breakouts are also happening, they're not sustaining much. If you are a trader, you would be understanding, and you would have experienced the similar thing which I have experienced in the last 5 to 10 days. Then it was clear that something was wrong in the market. And I clearly told in my previous video that this is not a time for plenty, and you have to be very, very watchful when you are trading, and trade less. This is what I've been continuously saying. So first thing, what we need to understand, that yes, this is a valid breakdown on the downside. Although if you check in the daily time frame chart, we have this 61.8% Fibonacci retracement. So this is you can say a solid support for the markets, which is at 21,900 to possibly 21,850 on the downside. So you can see similar sort of support coming up from the price. Over here we have from the Fibonacci, and if you check in the hourly time frame chart, it is coming in the form of price. So two different tools giving the same levels, the same band. So I guess once we have a close below 21,900, or you can say maybe 21,850 or something, you will see Nifty continuing to go lower. Possibly the first levels to be tested could be 21,740, and maybe if it goes even further down, it could be even 21,520 or 21,527. Only thing is, in this a single day fall, you can see that markets have corrected by 338 points. There has been a rise of volatility because this is one of the candles which is almost biggest just after this particular candle. Okay. And if you see this particular area, there have been multiple correction, but immediately if you check on the second day or the third day, markets have been able to pull back. Now, if markets want to correct, they need to correct as fast as possible, because suddenly domestic institutions come up and they start buying unnecessarily and the bounce happens. Okay. So if you want a proper correction happening in the market, because markets have almost rallied from October or November lows by 17% or slightly more than that. So if you want a proper correction, you will need consistent follow through selling happening and a proper sell off, not just 50 points or 100 points. I'm talking slightly more than that. Okay. Only one thing what we need to understand, after today's fall, in the hourly time frame chart, you can see the RSI has gone into oversold zone. Even if you check in the 15-minute chart, you can see that the RSI is well below 30. Now, tomorrow, if we have an intraday pullback or a consolidation, I will not be extremely surprised. But if after the consolidation, if this particular level, maybe 21,150 or slightly higher than that, we do not see markets going or closing up further above it, then there will be a fair bit of chance that markets can correct. All right. So this is my view for the Nifty. And again, as a swing trader, as a positional trader, you should respect and obey your stop losses. Now, if you look at the Bank Nifty is slightly different. Bank Nifty is slightly different. Why? Because the private banking stocks had already corrected and PSU banking stocks were rallying. So if you check properly, what has happened today is the PSU bank stocks have corrected more than private banking stocks. This is what could be surprising for all of you. But according to me, if this correction continues, the correction which has started in last 2 to 3 days, I guess on the 12th of March, 11th of March was the first day. So this correction, if it continues, then the sectors which have rallied and which have not corrected a lot in the last few months, they will be the ones which will be correcting more. And looking at Bank Nifty, currently the trend is flat in the daily time frame chart, and in the hourly time frame chart, the trend is down. So according to me, you can see this support 46,600 in the daily, and same level is in the hourly time frame chart. If this level is taken off by Bank Nifty on the downside, then some sort of weakness will be visible in Bank Nifty. But again, in private banking space, if you see stocks like ICICI Bank or IndusInd Bank, they're trying to show some sort of strength by falling lesser. Sometimes by falling less in comparison to your peers is also a strength. And today, if you check HDFC Bank, it has tried to go higher. So basically in Bank Nifty, if Bank Nifty is coming down, then the one sector which will be trying to pull the entire Bank Nifty on the downside would be probably the PSU banking. All right. So trade less, let the volatility cool off, let the market decide its direction. I guess it seems that the market has chosen its direction on the downside, but it needs to have follow through selling. Just 2 to 3 days of sell off like this and sudden bounce back will not make sense, because this sort of setup in the market is not a very good setup for making money. Or rather than a time correction, a price correction is always better, because after a price correction, as a trader, you can initiate fresh new positions. All right. So trade less, be patient, let the volatility cool off, and markets will show its true color in next few days. And if you find this video helpful, try to share it with other traders also. Thank you.